Hi, this is Robert Weinberg, and on this channel we help individuals to achieve freedom through expert mortgage and financial strategies. If you're new to the channel, please go ahead and hit the subscribe button and also hit the bell so you get notified on all of our future content. In today's lesson, I want to talk about the residential mortgage disclosure process. And this disclosure process is governed by a law called RESPA, R-E-S-P-A, and that stands for the Real Estate Settlement Procedures Act. So let me explain to you about this disclosure process. Anytime that you're applying for a mortgage, whether it's a purchase or a refinance of a residential property, which is going to be any single family home up to 4-unit home and a condominium as well is included in this, you're going to have these disclosures completed. Now, the way the disclosure process works is that within 3 business days of putting in a mortgage application, which includes certain items, the lender is going to be required by law to disclose this to you. Now, typically with technology, these disclosures are done through email. So you'll get an email that these disclosures are ready for your review. Maybe they'll even be attached to the email depending on your lender's systems. And you can typically sign them electronically right on your computer or your phone. So if you're just applying for a pre-approval to buy a home, then they're not going to be required to issue these disclosures because there's no property address yet. But if you're refinancing or you have a specific property in mind that you're purchasing and they've put that address into the loan origination software, then they will be required to get these disclosures out to you within the 3 business days. So just so you understand the timeline, if you applied for a mortgage on a Monday, they ran your credit on a Monday, then Tuesday would be the first day, Wednesday would be the second day, and Thursday would be the 3rd day. So by the end of the day on Thursday, they would be required to get those disclosures out to you. The items that are required or that are looked at to see whether the disclosures are being triggered or not are your name, your income, your social security number, the property address as we just talked about, the estimated value of the property, and the amount of the loan that you're applying for. So if you've applied with a lender and given them all this information and they have not given you loan disclosures, then they're in violation of the law, which is why you want to make sure you're always dealing with an upstanding lender and a good mortgage advisor. So as far as what the disclosures entail, these are the government mandated documents that are required that are sent to you. There are no contracts in here. You're not actually signing the loan at that point or doing the promissory note. You're not committed to anything. But what this is going to do is give you all the nuts and bolts on what the loan entails. So it's going to tell you about all the fees in the loan. It's going to give you that interest rate that they're offering you in writing. It's going to give you all the particulars on that loan and also all of the informational documents like the Patriot Act, flood insurance disclosures, hazard insurance disclosures. There's literally dozens and dozens of papers in there. Most of them don't even have any numbers on them. They're just informational for you to understand the loan process a little bit better and what goes into it. So don't get all bent out of shape thinking that you're signing your life away or you're committed. These are just the disclosures and information part of the process. The most important documents in here, and the ones that you will want to pay close attention to, are the ones that have to do with the numbers on the mortgage, which is going to be the 1003, which is industry jargon for the residential loan application, or IRLA. That stands for Uniform Residential Loan Application, which is simply just the 5 to 7 page application document that has all your personal information, your employment, income, assets, all the information imported from your credit on your liabilities and whatnot. And then the loan estimate. The loan estimate is really the most important document in there. That's going to give you the estimate on all of the closing fees, broken down start to finish, all the escrow charges, title insurance charges, really any and everything that's a charge on the loan is going to be lumped into that loan estimate and reflected on there in the closing costs. It's important that when you're going through these documents that you communicate with your lender if there's questions or concerns. I make it a best practice in my office to review the disclosures with all of my clients, especially first-time buyers or people that are refinancing for the first time. I really like to go through page by page with my clients and explain to them what each document means and go through every single thing, so I can answer their questions or concerns right there up front. So if your mortgage advisor isn't doing that, or they haven't offered to do that, you might want to look at working with someone who has the time and the knowledge to really help you through that process. I've heard that some lenders will just send it to a client, not even talk to them about it, and the ball's in their court. They don't explain or go over the procedures or anything. That's definitely a red flag, because these are very important documents, and it's important you understand what you are signing. Even though it's not contractual, you want to make sure you understand all the terms of the loan and whatnot. So communicate with your lender with questions or concerns that you have when reviewing those. Another document in there that you're going to be required to sign is called an intent to proceed. Now, this tells the lender you have reviewed the documents and you intend to move forward with the loan process. This is going to give them the authority to proceed with the underwriting of your loan and whatnot. There are a lot of other documents in the disclosure package that I'm not talking about on here because, again, they're just informational, and I'll save that for another video. But hopefully this gives you some good insight on what these disclosures are all about. They're going to be required no matter what lender you go with for any residential mortgage transaction. Like I said, 1 to 4 unit properties as well as condominiums. I hope that you've learned something from this video that I'm giving you here today. I hope that you'll share this with others who may be either purchasing a home or refinancing, and I hope that you'll leave your comment below. Appreciate your time watching, and please follow me on social media. You can call or text my office directly if I can be of assistance. Take care.